Hi, how's everybody doing? My name is Joshua, and we're back in our series from novice to pro trader. So, we're taking a look at our trade that we placed back on Wednesday night. We were looking at it on Thursday, and we're still here at a position that is not profitable. We're at negative 126 in this position, and we had non farm payrolls come out. And when you start trading, you start learning that the markets will do whatever they want to do. The markets are its own person. The markets are the gods. They dictate the price, and they will do whatever they want to do. Nothing can hold it back. Nothing could tell it what to do. That's why it's very important for you to understand that even though you believe something might happen or price might go a certain way, the markets will do whatever it wants to do. So we were looking at this trend line right here, and we saw this trend line be respected until it hit this resistance, and then price broke off of it. So now it's creating a double resistance up here at 1.2175, and we saw price hit it once, come back down, hit it twice. So now this is a clear view that there is a resistant line. And we're also seeing that this line right here, this is the 21 moving average, simple moving average, is being respected. So we're seeing it hit it once, we're seeing it almost hit it twice, 3 times, but we're seeing it be respected in this corner right here. So I think that this is a great narrative for you guys to see how trading really works. That, even though you study a position, you have to be biased. You have to pick a position. You have to have an idea. You have to know if you're a bear, if you're a bull in the market. Bear means you're selling. Bull means you're buying. So when you jump into a trade, you have to know, what are you gonna be? What am I? What are you? You have to make that decision. Am I a bear? Am I a bull? Right? And a bear or a bull, then you have to make the choice of exactly when you're going to come in. If I'm a bull, is this the right moment to jump in? If I'm a bear, is this the right moment to jump in? And you have to take into account the day of the week of the month that you're in, and the cycle of the year that you're in. For example, this was election cycle. This wasn't a normal year. We had elections, we had coronavirus, so things are a little bit different. For example, on a Friday, normally traders will go into Wall Street, or traders will go into institutional traders, we're talking about, professional traders. They'll trade from 6 o'clock in the morning to around 10:30, and then that's it. They're done for the week. They're gone out of their office. Today might be a little bit different because no one is really going to their office to trade. They're probably trading. Institutions are probably trading from home, or they are trading from home, and a little bit institutions are trading from their offices, wherever wherever those offices may be. So things are a little bit different. Also, it's Friday. Freaky Friday. Remember that. The market doesn't respect Fridays. It does whatever it wants. Normally, what a trend would do, what prices would hold, the rules that they would follow on Friday, it's really kind of messy. People are putting in trades, they're closing in trades, even though positions look like they could be excellent. You won't see volatility moving into that position because they're traders closing out their position for the week, not holding positions into the weekend, and so that they can plan their strategies for the new week coming up on Monday. So these are the things that you have to hold into account. Another thing that we can learn from this series right now that we just started is that we've been in this position now for 3 days, and that means that you can't do other things. That means that you can't trade other currencies. That means that you can't trade you can, but if you only have $1,500, there's not much that you could do. You can make sense over here, you can make sense over there. So once you step into a position, you have to know when you're going to get out of that position, if you're going to take a loss or if you're not going to take a loss. If you're going to keep that position or if you're not going to keep that position. Because as long as you keep a position open, so this is a position, right? We're in a position right now where we put a sell order at 1.2120, and we are in this position that we're in right now, and we have to make that choice if we're going to continue or if we're not, if we're going to follow through this plan or if we're not going to follow through this plan, because we're wasting time. It's already been 3 days that we didn't make no money. Friday's here, we didn't make any money. And that is the reality of trading. You could spend weeks and weeks without making money, and then boom, boom, 1, 2, 3 days of making a lot of money, and you're good for the month or you're good for the week. But you have to be available for those positions. For example, let's say that price actually went all the way up here, and I've had years of trading, so I knew that price was going to come back down. It wasn't strong enough to keep going up, right? But with my knowledge, I should have known that coming in to the top would have been better. So selling at the very top would have been better. Selling at yesterday's high would have been better. A better entry position than the one I jumped into. But, it is what it is. We're learning together, right? So you could see a trader go, the trade go all the way up, and a trader seeing in his account -300, -400, and they're freaking out. They're like, "Oh my God, it's gonna keep going up." Like what Kevin Hart. "Oh my God, oh my God, oh my God." Yeah, how he does his impressions. But the traders start freaking out. They say, "Oh my God, it's gonna keep going up." They close the trade. They take a $300, $400 loss, and then they switch. They're like, "Okay, it's gonna go long." I know 100% that it's gonna keep going long now. It's gonna keep going up. It's gonna keep going up, and they enter here. They enter at a ridiculously high position where no one's gonna buy. It's too expensive to buy up here. Let's take a look at this. It's too expensive to buy out here. No one is buying out here. Do you see any prices going up beyond this? No, you're not, because it's too expensive to buy from here. It's not going to keep going up. But a retail trader, dumb money, is going to get scared that they saw 1 green bar, 2 green bars, 3 green bars. Oh my God, it's going to keep going all the way up. And you know what happens? They close their position. They take a $400 loss and they switch, They switch. And then what happens? The market reverse. They think it's going to keep going up this way. And what does the market do? The market goes down like how it did. And then you're taking another $300 loss. And you're like, "No, what's going on? It's ridiculous. The market, I knew it was going to keep going down." And then you close that position and you took a $200 loss. And then you jump into bears. And then what happens? It's just consolidating. And you're freaking out. Because it's going to do this, and then on Monday, it'll go all the way down, So you just took a loss of, let's say, $400, $500, and this happens to everybody. It happened to me as a novice trader. It could happen to you if you don't know how to trade, if you just jump into the markets like that, because you must learn. You have to put this in your mind. The markets will do whatever it wants. The bank gods, the institutional demigods, they do whatever they want. They don't care about you. They don't care about your money. You have to remember that this is a war between bears and bulls. That's how you have to see it every single day, that you're jumping into a pool with sharks, to try to catch a couple of $100. And, you have to know when you're coming in and when you're going to get out. So let's take a look at what happened today. We had non-farm payrolls come out. Non-farm payrolls came out. It's the biggest event for traders. And it came out at 8:30. And this is non-farm payrolls. Just click it to learn what non-farm payrolls is. It's a survey of a government survey that it says right here. It represents approximately almost 250,000 individual work sites. So let's take a look. The forecast was 469. The previous, I'm not sure if it's here, but it was 6 something. And the actual was 245. Man, 245 is bad. It's more than 400K from 610. That should have made the market come down really hard. It should have made the market come down here. But you know why the market didn't come back down? Do you know why the market didn't come back down? No one's going to tell you this on YouTube. People are not going to tell you this. You know, all those courses that you buy on YouTube, all the guys that you follow, all the gurus, they're not going to tell you. It's because 69% of the market is short. Let's go to FXSSI, and they'll show you about 9 different brokers in this website. It's a great website to get market sentiment. And let's look at Euro USD. 73% of the market is still short, meaning that if price comes down, someone's going to make money. There's going to be 72% of the market's going to be making money. And they don't want that to happen, because if you're making money, if dumb money is making money, then smart money is not making money. So therefore, even though non-farm payrolls, the fundamentals say, hey, the economy is at a terrible, it's doing bad. And of course it's doing bad, because this number right here doesn't represent today, doesn't represent December. It represents November. And in November, the United States of America had a record high of unemployment claims. So a record high of unemployment claims, obviously there's not going to be work, you know? So for example, unemployment rate is 6.79 and it's 6.7, and we know that's manipulated because they don't count, you know, part-time jobs, they don't count housewives, they don't count teenagers that are not working anymore, people who are seasonal workers, you know, they manipulate the numbers. It's probably at 12%. And with this number, since it didn't go down, the markets didn't come down like they're supposed to do, you're not supposed to get upset. You're not supposed to get mad. You're supposed to know how to play the game. That is the way the game is played. The markets will do whatever they want to do. They will do whatever they want to do. And they will use fundamentals. They will use the numbers from these economic calendar dates, especially the ones that are high, to push that narrative. You know, you could go to investment.com, you could go marketwatchers.com, you could go to bloomberg.com, and they'll write an article of nonsense. They'll tell you, oh, traders believe that because the vaccine is not coming, that's why we went, that's why it was south. You know, that's why they lost money today, or that's why 70% of the market is going down. You know, they'll say whatever it takes, you know, to fit the narrative. But you have to know where the market's going, where smart money is going. You have to know what day of the week it is, what week of the month it is, and what month of the year you're in order to place your trades. And that is what I learned from 12 years of training these beasts, you know. And now that we're here, we see that no one's taking any positions because these banks or institutional buyers made price go up like crazy for these 2 days, but now it's I believe this is called doji, and this right here is telling me that the market has no idea what to do, and we could see on Monday another push up, like right here. You see this market didn't know what to do, another push up, and then come push down. But Monday we won't know. Anyway, now we have to make a choice. Are we gonna keep staying in this trade, or are we not gonna stay in this trade? Another thing that I wanted to tell you guys is that as long as I stay in this trade, this losing trade, I'm above margin right here. So I have to be below 50% in order for the broker not to close my position out. So if by 3:35, because I already have 3 days in this trade, if by 3:35 my position is not better or I haven't added any more money, right? This is called a margin call. The broker's going to come and is going to liquidate my position. That means they're just going to close it out, and I'm going to take a loss of $141 or whatever it is when it ends up around 3:30. So what I have to do is basically reduce my position, right? Close out part of my position to bring this number back down to below 50%, so I don't get a margin call. Or I have to make the choice of saying, you know what, I was already in this trade for 3 days, and I'm going to start fresh next week or whatever, you know? Those are the decisions that you have to make as a trader. It wasn't a great position that we're in. We're definitely in a bull trend. Bull trend is exhausted. It's already hit. Look at this. You know, it same position as we were yesterday. 27 pips. It went up, boom, hit 27 pips down. But we're about the same amount. We're about 20 pips from breaking even. So we're right now we're right in the middle. 20 pips above, 20 pips below. It'll be great to catch this back down for it to retest right here, which would be 32 pips, or from this position right here, which would be 18 pips. But for 18 pips, do I want to keep risking things? That is the questions that you have to ask as traders, and we're doing this so that you can learn. Since we're here, we can do other things. Yeah, I'll join for free later. Oh, it's forcing me? Give me one. So check this out right here. Aussie dollar. And I'll show you how to plot this real quick. So we have a support line right here. Right? We have, resistance there, support line down here. We saw that it broke that trend. So we could be in this position. This price looks weak. It could come back down. We could be here. We could trade the Australian dollar on Monday, but we can't because we're stuck in this position. So that is what I want to teach you guys. When you trade, you have to commit. Even though it went all the way up and we could have been negative 400, we don't close the position until it reaches our exit point, which was this right here. And we know what type of day it is. Remember, the market hit its goal on Wednesday, then did a little extra on Thursday, meaning that we are due for a good reversal for it to keep going back up. We're due to a down reversal. And then, if it's going to keep going up, it'll just go up again this way. But the market always works that way. Up, down, retracement. And in that retracement, we'll get out. Imagine this was a position where a reversal started and we could actually take this all the way down to this major support line. That would be great, but it's a risk that we would have to take. Like, for example, that is about 2,000 pips. Imagine that. That would be great. That would be like $4,000. But the market doesn't look like it's heading that way because of the month that we're in and the information that comes out. Now, if there's no stimulus check, if the vaccine is no good, then yes, the dollar will get strong and prices will drop. Anyway, guys, I hope that you enjoyed this video. There's my friend asked me for a newbie. He's like, hey man, I understand what you're saying, but I need like basic. So I made a basic Forex tutorial for him and for you guys also. You could check that out. And if you have any questions, just leave it in the comment box below. If you want to message me, I have my email in the description box. And if you want to know something, if you have questions about trading, how to trade, what to do, how much money to get in, if you have any type of questions, I'll answer them. I have absolutely no problem. I'll make videos for you guys also. I want to encourage you to start making money. I want to encourage you to, if you enjoy trading, to learn how to trade and become a better trader while watching me trade and explain trades for you, because that's the best way to do it, live, right? Not some stupid, guru thing where it goes like, well, you see the market price, well, you sell high, you buy low, but they're not showing you, in real life, what actually happens, when you enter a position, when you're not in a position, what day of the week it is, what are traders actually doing, where's the market sentiment, where's smart money at, they don't tell you that because they don't know. I learned this from 12 years of trading, from talking to expert traders, people who've gone to Harvard, people who have traded for JP Morgan, for Mellon Bank, for Citibank, professional traders. I've paid real courses and I've lost a ton of money. So I know how these markets move. All right, guys, I hope you have a great weekend. We'll be back on Sunday to evaluate our position and if it's worth continue going, or if we're just gonna start fresh for Monday. Guys, have a great weekend. If you like this video, please hit the thumbs up button, comment, and subscribe. We're gonna keep doing this until we make money, until you make money. All right, bye traders. Have a good one.